Marvin, let me bring you back into this conversation just in terms of the Fed's decision here, the language that they're using. From your perspective, do you think the Fed is doing the right thing at this point?
There are a lot of layers to that question. I mean, I think that they've put themselves in a situation following last year's, if you will, insurance cuts, where they're trying to convey a message that everything that they did is evolving the way they expect. There's a little bit of a downgrade in terms of the economic view, so things are slowing down a little bit. I think they're hinting towards a more kind of dovish message, which the minutes also provided to us. Longer term, you really have to wonder whether or not any of the central banks are doing the right thing, given how large these balance sheets are now and how involved they are in not only just the markets, but really driving kind of the economic behavior. There's a lot of discussion around that, starting at the ECB, starting with the BOJ, and certainly one that a lot of people are having in the U.S.
I want to keep on this discussion about the interest paid on excessive reserves, because I really do want to get my hands around this. But by gradually and so minutely, just 5 basis points, moving it, as Brian said, as you said as well, back to the middle range between 1.5 and 1.75, are they, if they keep doing this kind of thing very gradually, are they positioning themselves so that should there be a slowdown where they needed to act on interest rates, they can drop? Is that?
I don't think so. I do view it from a technical perspective. Okay. So where they set that number is ultimately a message to where they want the market to think about short-term rates. Short-term rates had dropped a little bit too low. Mm-hmm. The Fed controls the short-term market through the Fed funds effective rate or through the Fed funds market. And they just wanted to, again, like Ryan said, nudge it into the middle of the range so that it conveys that they do have control of the short end of the market.
Well, but this discussion about short end of the market, we saw some inversions, between the 3 and the 10, and I forget the other and the 7. But is that what's its play here? Is they're trying to get better control of that? And
no. This is really more kind of the funding market. It does relate back to what we saw in the fall with repo and kind of again just making sure that the transmission mechanism of having the funding and I keep saying the short end of the market, close to where their expertise is, ultimately setting where kind of the short end of the market ultimately clears. When it comes to the inversion of the curve, and hopefully Chair Powell will get into a lot of that discussion, there is concern about economic growth in terms of what that is signaling right now. And it really came in a fairly short amount of time.
Martin, you were saying that extending the repo operations through April, originally the end date there was February, so that 2-month extension, that got your attention. Why do you think we're seeing, is there any risk out there, anything that you think that the Fed is specifically focused on in terms of why they decided to extend that timeline by 2 months? Yeah,
it really is interesting because this $400 billion amongst friends, if you will, is to solve a problem that they didn't even acknowledge back in September. They really said that the spike in repo was nothing unusual, and we didn't really need to do much about it. All of a sudden, we're $400 billion into it. I think there are more stresses in the short end in the funding part of the market than they let on, particularly in September. But certainly,
is that something to be worried about?
It's something to keep a handle on. Absolutely. The fact that they keep extending it and having a willingness to put as much resources to make sure it's going to function probably won't flare up into anything. But in terms of like withdrawing it and potentially trying to get the market normalized, there are potential issues there.
There's also been this discussion of whether it's QE, whether it's not QE, and we had a guest on earlier on Yahoo Finance who said, look, the market thinks it's QE, and that's really all that matters. So if that's the case, are they creating, I keep using the word bubble, this isn't perhaps a bubble, but are they inappropriately inflating equities?
They are. I don't know if it's inappropriate. I don't know if it's a byproduct or the actual product. But I am in the camp that there are QE aspects to this operation, and it certainly is helping risk assets from that perspective.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.